Hey everyone, it's Tuesday and welcome back to Major Hype. I'm your host Maxwell, where every single weekday, Monday through Friday, I do a show about entrepreneurship, money, and real estate. Today's no different, so let's get started. Let's jump into the first story today. How many of you would actually go out and pay for a mentor? Well, someone just paid a record high $19 million to have a one-time chance to sit down with the billionaire Warren Buffett. Now, I wonder if they're gonna be eating McDonald's or those little plates where you just one scoop and the meal's done, but it's like 14 courses. Anyhow, Warren Buffett has been doing this for many years, and it's part of the 21st annual auction for lunch with the Berkshire Hathaway CEO. But 19 million is quite a bit. I believe the last time somebody paid was around $3 or $4 million. I can't remember, but 18 million is a lot of money for lunch. Now, I wonder if that comes with like continuous friendship or the dinner and that's it. Well, the good thing is that this $53 million has been raised over the years from this Glide charity that helps with the homeless. And think about this, Warren Buffett is 91 years old. Could this actually be his last meal? But no, serious question. How many of you have mentors? Some of my best mentors I've never paid an actual physical dollar to. It's more about the exchange of value. The value they have versus the value I have. Now, a lot of people send messages in DMs, so they want to pick your brain. That's the wrong way to approach. The best way to is surround yourself with people where you want to be and get there. Now, it's not going to be easy. You need to be able to attend things, spend a few dollars at charity events, and get in the same room with these people. Most of the time, if you come adding value or approach in a very humble manner, you can develop some type of relationship with these people. Then they can become your mentor if they like you. You can't force them, but you won't have to pay $18 million. In our next story, I asked the questions, are landlords too greedy? Now, the current rents are real high. They're at a record high, matter of fact. Places like New York, where the average rent minimum starts at around $4,000 for a one bedroom. Let's look into this issue. Supply and demand is a part of the equation. I understand. There's less units and there's more people looking for actual places to live. But there's a famous saying, pigs get fed and hogs get slaughtered. So we need to look in some of the landlords that are raising rents and buildings that they haven't even done any renovation and overall ridiculous pricing for less than stellar units. Think about this. Even in states like Maine, with relatively small population that's seeing a housing boom with places like Portland, Maine, it's reaching almost $1,700 a month for a single bedroom rental that was built in the early 1900s. The rule for rent is that you should never pass 30% of your gross income. But in places like New York City and Miami, the affordability has vanished in the early 2000s, surpassing the average gross income of 30%. Now, me personally, I haven't raised rent in any of my units in the last 2 years, and I've only had to do one eviction. And if you're a new investor, don't buy rentals based on the speculation of future rent prices, because the current rent is unsustainable. Now, think about this. I remember 2008. I remember driving down the road and going past apartment complexes, and every single place had rent concessions. Concessions simply mean that they give you something in exchange for renting their place. 1 month free, 2 months free, free cable for a year, so on and so forth. All of these things. The rental market is important to the overall economy of the United States. If we enjoy the boom too much, will we then have to pay later with rent concessions? I don't know, but landlords, be wary. Do not raise rents just because you call it the market rate. Market rate is determined by the market. So I'm guessing if all the landlords raise their rate, it is what it is. But think about this. I would rather have a long-term tenant steadily paying over the years versus a high-paying tenant that only pays for a short time and you have to go through eviction. So landlords, don't be greedy. Don't get slaughtered in this unpredictable housing market that we're in. And now let's have a quick message from our sponsor, REI Skip. REI Skip has been fully revamped with its own proprietary triangulation method of finding homeowners. REI Skip is the only skip tracing engine that gives you the same powerful people finding ability that once was only available to the elite bail bondsmen, private investigators, and FBI agents. Using secrets only known to the pros, REI Skip 2.0 is the dynamic matching protocol will shred your search time down to like nothing and 10x your profits. With skip tracing starting at just 15 cents, check the link in the description and get started skipping today. Now let's go over the 5 signs to identify when the housing market is slowing down. The housing market isn't crashing, but it's experienced a serious hangover from sustainable highs. Think about this. The entire housing market has been at the bar for the last 2 years, throwing shots back after shots back after shots back, and it's finally left the bar in its daylight and it's experienced a hangover. Will it crash? Nobody knows, but I don't think so. But I want to talk to you about some of the ways you can identify where the market is at now and when it will be slowing down. Remember, there's not only just a national market, but there's also individual markets. They all move in different paces. So let's dive in so you can gauge where you're at right now. So take these 5 factors into consideration. Is the inventory growing? Are there current price cuts? Are there layoffs? Are there smaller amounts of mortgage applications? Are there fewer non-investors going out and looking for homes? With these things, you can really gauge whether or not the market is cooling off from record highs that we've been seeing over the past few months. Our next story, New York City is getting out of hand in many ways, but shopping for an apartment is getting absolutely ridiculous.
Right now.
I'm going to do groups of 8 to 10. Everybody else can wait across the street. Apparently the business is here. I had no idea.
Now, the good news is that the apartment unit that you just seen in that video is actually pet friendly. Not to your actual own pets, but it comes with roaches and a rat named Ratatouille that will occasionally cook you a meal because you're going to be using a shared kitchen. Now, building affordable units for developers is not a lucrative business, especially in New York City. Most all affordable apartment units need to have subsidies in order for the construction to make sense. Now, 421A, named after the bill, is one of the major subsidies developers have used in the last 50 years. Now, the majority of New York City residential development since 2013, kind of like after the boom started coming back, and 28% of the affordable units all made use of 421A. But with 421A just expiring June 15th, videos like these are going to become more and more common. American Airlines is ending service in 3 cities due to a nationwide pilot shortage. Now, some of you may know, if you follow me on social media, I'm a private pilot. I love flying my Sling TSI from city to city. It's just way more convenient for me. Taking my time to get through the airport and avoiding TSA lines and not waiting in terminals is a huge advantage, especially when you travel as much as I do. Now, saying that, I do travel commercially quite often. I'm sure many of you have booked flight has seen the crazy prices right now. The surge in gas and the shortage of pilot, as well as summer months, created the perfect storm. They always say the perfect storm, right? The perfect storm. Well, it's kind of true. Services are being cut short in cities such as Islip, Ithaca, New York, and Toledo, Ohio. Now, to be fair, I don't know who's going to these places anyways. The Regional Airline Association said that there were 188 communities that lost at least 25% of their air service either during the pandemic or during the first half of 2022, when the pilot shortage has literally become even worse. United Airlines announced that by the start of this year, its new training program, which is pretty cool because they're training people of color, which is only 2% of pilots in the entire America. They said the academy will train around 5,000 pilots by 2030, fulfilling half of its plan to recruit 10,000 new pilots by the time to combat the shortage. Now, think about this. Wars create pilots, and we really haven't been in a war in a long time. And if you guys know me, I have recently started my own flight school with a few other partners, and we are doing our part to help this pilot shortage. We're taking people from private pilot all the way to commercial, which is a very common standard. All of the pilots that have been flying you around since you've ever touched pilot on an airplane started in a smaller plane, and they worked their way up. So my school, the Lookup Aviation Academy, is training pilots on a daily basis to combat that shortage. So I'm doing my part. So be patient. By 2030, we'll fill those seats again. And if we don't have another war, then it may take a little bit longer, because wars do create pilots, if you think about it. Since January, Carvana shares have fallen 83% to right above $38. Market capitalization collapsed over the same period to $6.82 billion from $20.84 billion in December. That's a lot. The company has been described as the Amazon for car dealers. Not sure how true that is, but sure. And they've been taking aggressive measures and turning things around, including laying off Here we go with the same story, laying off 2,500 employees, or about 12% of its workforce. Have you noticed that most of the time that we're hearing layoffs right now, it's between 8 and 12%? They say executives will forego their income for the rest of the year to contribute to the severance package. Congratulations, you don't need the $32 million for sitting in the office of a failing company. The company, which opens its first iteration of car vending machines in November back in like 2013. I don't really remember the 2013 Carvana. I guess maybe not in my city, but they went public 4 years later. Between everything that's been happening in the last 2 years and interest rates on the rise, it's responsible for the crazy, crappy quarter they've been having. The CEO pled guilty in 1990 to bank fraud related to Charles Keating Lincoln Savings and Loan Association and spent 3 years on probation. Now, I don't know if it's possible that if I had a felony related to bank business, that I could get into the car business. But whatever, we'll talk about that later. Then he bought the bankrupt car rent-a-car franchise for $1 billion in 1991. Now, his net worth is around $5.2 billion, so that may tell you why he was able to do what he did. But it's down from almost $10 billion from the start of the year. That's a lot. Maybe the car vending machine business is gone, or maybe they just have a bad C-suite and didn't plan correctly. It seems like everybody who was attached to interest rates and everybody who was attached to people having exorbitant amount of money. Remember, the average homeowner, their equity went up about $62,000, right? So people took advantage of that. The car shortage was crazy. People were selling cars at exorbitant prices. But now you can see the people that were on the top of this bubble of prices are now paying for it by not planning correctly in their companies. Quick question. How many of you guys love Cheez-Its and Pop-Tarts? I can't say that I do, but Kellogg's, a huge company that we all know, is splitting up into 3 separate companies. They're going to do a company that is snacks, cereals, and plant-based. Did you know that Kellogg owns Morningstar? It's like a plant-based breakfast and meat. Yeah, so they own all of that, and they made an announcement that they're going to split into 3 companies, separating the cereals, the snacks, and the plant-based companies, and they're going to be public. All 3 of these companies are individually public. I think it's a good idea because they get to separate their focus on which one. They're splitting this up maybe because they're looking at some type of acquisition or to be acquired. So maybe they're taking the brands that they want to keep, put them in here, and then they get those other brands. But now maybe somebody else, a bigger company, could come along and buy this division versus buying the whole Kellogg's, which would be absolutely crazy. Their EBITDA was over $50 billion, which is absolutely insane. So if you're looking into stocks, you may want to keep your eye on Kellogg's because they're splitting into 3, and this might make sense for you. And plant-based has been doing real well for stocks lately, so this may be something you want to look into. Now, I'm not a financial planner or anything like that, but you need to go read this because it's interesting. Kellogg's is splitting. I know it has nothing to do with real estate, but we talk about money here, and this may be a plan for you to get in there. All right, guys, it's Tuesday, and that's the end of Major Hype. But before I go, I want to say something to you guys. Listen, I know everybody's on Instagram and social media, TikTok and everything. Listen, it's okay to have a bad day. People have bad days all the time. You may not see them on Instagram, so if you're having a bad day, don't worry. Tomorrow's going to be better. Just shake it off. We all have bad days, including myself. If you guys had a camera of me 24/7, you'll see that I have bad days. So don't get down on yourself. If something doesn't go your way, keep pushing. We all have bad days. We're all humans, and keep going. Listen, I enjoy every single one of you guys tuning in with me every single day to watch Major Hype. So do me a favor. Smash the like button if you're still here watching this video, and please subscribe to my channel because I still see that 50% of you guys who are watching are not subscribed. So do me a favor, hit the subscribe button. I keep bringing you news every single day, and I also want to hear from you. So below in the comments, tell me what topics you want me to cover, things you want me to